Welcome to Adulting 101, Legence Bank High School Go Learn curriculum. So now we're in the adult world. And where do we begin? In today's world, you need a method to transact and pay bills. The solution? A checking account at a local bank. How do you go about opening an account? Do you know? You will need to come into the bank and sit down with the bank employee. They will request forms of identification to verify that you are opening a legitimate account for a legal person. You'll need a copy of your driver's license. Your address must be correct. Your social security number. You don't necessarily need the card, but you need the number. A valid contact phone number for bank communications. And then you'll also need a valid email address for bank communication.
So what type of an account do you need? So make sure the account selected is the correct one to meet your needs. Will you be using checks or a debit card? Are there special benefits to certain accounts? So when you go into the bank, make sure that you know what you're signing up for and know from the beginning what's expected of you starting your banking relationship. How much will you need to maintain in this account? A lot of banks have a maintenance fee to where they have a certain amount every month that you have to maintain. So make sure that you know this from going forward. Does the account need to earn interest? So this is where you would look into, you as a teenager are going to have an adult on the account with you. And so this is where you would be concerned at the end of the year whenever you get your interest payment, whose social does it need to report under. Who will be on the account with you? Your parents usually, a guardian, grandparent, someone that can help keep you in check with this account. You have to have someone else on it until you are 18 years of age. Will you be able to use this account should you move away or go to college? Will it still be accessible to meet your needs? So this is something you need to ask yourself when you're opening the account and when you're trying to select what bank you're going to bank with. With technology and services today, pretty much you can bank from anywhere. So just evaluate and make sure that wherever you are banking that they have the offerings that you are needing. When you're thinking about accounts, a lot of people, they know what certificates of deposits or CDs or money market accounts, what those are. But just for FYI, in case you don't know, those are accounts that you would utilize if you were needing to earn interest on your money. Particularly if you are wanting to park money somewhere, so we say, like maybe you don't need to tap into it or utilize it anytime in the remote future. So we're going to park it somewhere to where we can earn a little bit more money on it. So you're going to look at rates, terms. They have a lot of different tiers of terms. And with each term, there is different rates for each one of these. One thing to make note of is on those two, you do have penalties. So, you need to assess how long you need to put these in for, because if something was to come up and you needed to access those funds, you could have either a 1 to 3 month penalty, and that's the interest that's earned. That's what that is, a 1 to 3 month interest penalty. Grace period, auto renewal, a lot of times they're auto renew at the, say for instance, a 12-month CD, it would be good for that whole year, and then at the end of the year, span, when it renews, it will renew at the new rate. So just a couple things to think about how those actually work.
We've touched on checking account. Now let's talk about checks. Checks are ordered and printed after you open an account. They are listed in consecutive order for tracking purposes. Here are some areas required on a check: the date, to whom it is written, the amount, both written and numbers, and the signature of whom the check is written from. If the two amounts on written in the number form and the written form are different, which one does the bank go by? That's right, they go by the written form of the amount. Do you guys know what it means for a check to be stale dated? After 6 months, a check becomes stale dated. That means, just like bread, that check has gone stale and it can no longer be used. You will need to get a new check from whoever issued that check.
So something else to deal with checks is stop payments. Stop payments is, say maybe you wrote a check to someone and it's taken quite a while, it still hasn't cleared your account, or they haven't received it, so you would reach out to your bank and you would do a stop payment. Usually there is a fee for it, but a lot of banks will do, like the first time, they'll waive the fee for you. What this ensures for you is that if that check ever does come through, it will not get paid. It will not be a paid item, and you've already wrote a new check to replace it. Check holds, this is something that's uncommon. We really don't do a lot of these at Legence Bank. But what this is, so say if either, maybe you open your new account and you have this big check, and since it's a new relationship, we really don't know how to verify, or we need to make sure that those funds are legitimate. So we would do a hold on it for however many days that it's applicable, and then we would make sure that the funds are available, and then we would release the funds for them to be available for you to utilize. Like I said, we don't do them very often, but check holds is something that we do every once in a while. Endorsements, that is to where, when you bring a check into the bank, don't put it in the back pocket and walk in and you've already endorsed it. What happens if you lose it? So that is one thing that we always stress when we come and talk to the schools is, with endorsements, you don't endorse and sign the back of a check until you get ready to present it for payment. So that would be where you go to the teller line, you get it out of your pocket, you endorse the back. Now there is a limit, a lot of people don't know this, but there is a limit on endorsements. So you sign the back of a check, say you owe your friend money, and so you sign the back of it and then you give it to them, they take it to their bank will require them to sign the back underneath your endorsement, and then that lets them get the money for the check. So there is a limit. You are only allowed 2 endorsements per check. If there was more than that, you would have to get a new check from whoever issued you the item.
So now it's time to talk about debit cards. They are another way to access money in your checking account. They can be used anywhere Visa is accepted. They can be used at a store such as Walmart or McDonald's, or at an ATM. They're attached directly to a checking account. Do you know the difference between a debit versus a credit card? With a debit card, you only have access to the funds that you have in your account. If you use more than what's in your account, you're going to be overdrawn and you're going to be charged an overdraft fee. With a credit card, it is like a loan. It's a line of credit that you will have to repay back with interest. When given a choice, should you run your debit card as debit or credit on the keypad at a store? That's correct. You should run your debit card as a credit. And why is that? When it asks you for credit, it's going to require your signature. And a signature is stronger security than a pen. And why is that? When you sign, the bank has record of that signature, and they can check back to that signature on file. Whereas a debit card, every time you put in your pen, it's going to look the same. There's no way to differentiate if you put in that pen or someone that stole your card.
So unfortunately, we do deal with fraud, and so here are some tips for ATM and debit card usage that we'd like to share. Never share your PIN with anyone. No one should ever know what your PIN number is for your card. Don't write it on the back of the card. We've seen that before where people have done that. Because think about it. You lose your card, somebody picks it up, the PIN number's on there, and they can use it. What if you worry that someone may know what your PIN number is? Call the bank and change it. You can call us and we can change it at any time. Always record your transactions or your online banking. Keep track of it. Because the thing is if you forget to put something down, you could become overdrawn. But what in the case if maybe someone uses your funds incorrectly and you have a fraudulent charge on your account? You're only allowed like 30 days to dispute that item. So you need to stay on top of your records. That way you can make sure that you know what is accounted for and what is not. Be aware of any transactions that don't show up automatically. Some can take days to show up on your account. So, a point in question would be like, go to the gas station. You go to the gas station, you get gas, you log into your online banking, it's not showing yet. A lot of gas stations will clear out, not daily, but maybe weekly or every 2 or 3 days. So when they clear out, that's whenever those charges are going to come through on your account. So if you ever lose your card or you're searching for it, you've misplaced it, you can call the bank and we can close your card, or you can actually even go into your app and click on Manage Cards to turn your card on and off. And then if you find it again, you can go back in there and turn it back on. If your card is ever compromised, what can you do? So first thing you're going to do is you're going to contact the bank. You're going to file a dispute if the funds have came out of your account, and then the bank will issue you provisional credit until they dispute the item and get the money back. So always make sure that you record your transactions somehow, either with a check register or by checking your online banking frequently. We do have a window to where if you have something that comes in fraudulently, you only have a 60-day window to dispute those items and get your money back. So make sure that you're keeping track of those.
Technology and banking. So there's different types of technology inside of banking. You can open your account online. So there's ways that you can go to our website and open an account with ever stepping foot inside of our branch. There's also the mobile app, and you can do pretty much most of the transactions that you need to do inside of a branch right in the app. So there's different features such as mobile deposit, card on and off, P2P. You can check your account balances, you can transfer money, and so it's a really great tool. There's mobile deposit, and so mobile deposit allows you to snap a picture of a check and deposit that money into your account. And there's card on and off, which we talked about earlier, where just the push of a button, you can turn your debit card on and off. There's P2P payment, which stands for person-to-person payment, and you can send money from one person to another. And then there's a personal finance manager, and this is a budget tool inside the app and online banking. A lot of this technology allows you to bank anywhere, anytime, and it allows you to take your bank with you wherever you go. So if you are heading to college next year and you bank locally, you can still bank wherever you're at, even if you're 100 miles away with this technology.
Ever wish you had a little cash in your wallet to instantly pay someone you owe money? But who carries cash around these days? Now, person-to-person payments have never been easier. Introducing Spin, social payments instant network, available to customers online or through the Legence Bank app. Spin makes it safe and simple to pay your part of the dinner bill, pay the babysitter, or the lawn guy. Pay anyone, anywhere, anytime. Just click Move Money to transfer funds to the account of the person you owe. All you need is their debit card number, email, or phone number. It's sort of like PayPal, except with the peace of mind and protection of Legence Bank. Make fast, free person-to-person payments instantly, safely with Spin. Available through Legence Bank.
So, what if you go to dinner with your friend and you need to pay them your part of the meal? You need to send somebody money somehow. So, we have a pretty awesome way that you can do that through our app. It's called Spin, Social Payments Instant Network, and it's totally free. It's our P2P network that we send through Legence Bank. The thing is with it is you can initiate it through a Legence Bank account, but it can go to any bank anywhere. So it's comparable to PayPal, Venmo, so I'm sure most of you guys have utilized those services. So Spend makes it easy to pay your part of the dinner bill, pay somebody back, pay your babysitter, pay the lawn guy quickly and hassle-free. You don't even have to run to the bank and get cash. It just makes life a lot easier. I use Spend probably on the daily. So go to our app and check it out.
How to set up Spend, which Spend is our person-to-person payment. Spend allows a user to send money from their Legence Bank checking account to someone else's checking account through the recipient's debit card in real time. It's easy to set up a new payee. You only need the recipient's cell phone number or their email address. Once the payee is set up and confirmed, funds may then be sent to that recipient anytime the sender wishes, and the funds will be moved in real time.
So we talked earlier about accounts that earn interest. Savings accounts are accounts at the bank that earn you interest. Interest is compounded daily and added quarterly. Savings statements are then issued quarterly. So if you have a savings account, you're always going to get your statements quarterly at the time that the bank pays your interest out. There is limits on this account. It's called Reg D. So withdrawals are limited by federal regulation, and you are allowed 12 per quarter, which equals out to about 1 withdrawal per week. Savings accounts are liquid assets, meaning that you can access them at any time. So they're not tied up like a certificate of deposit or a money market like we talked about earlier. So in that case, probably you could see where a CD or money market account would have a higher interest rate. But, if you are going to access those funds and you don't want to pay a penalty, you're going to park your money in a savings account and still earn a little bit of interest. Most people have a checking and a savings account, and then they just transfer to and from each other when necessary.
How to save. First, you need to create a budget. A budget is a plan for your money. Once you know where your money goes, a budget helps map out how much you owe every month and how much you have left to spend. It helps gauge what you're spending and also what you actually have to spend. You also need to remember to pay yourself first. So set an amount that you want to take out of each paycheck. So it could be 10%. It could be just $50 every paycheck. And there are features in the app that allow you to set up those automatic transfers. So you don't even have to worry about it. It just automatically comes out. Every paycheck could come out every month. But it's just important to remember to pay yourself first. Then determine your monthly bills and figure out what you need to live on. Learn how to manage debt. So what is debt? Debt is money that you owe. So you make payments on it plus interest. What ways can you reduce debt and manage it? One way is just figuring out what you owe and then figuring out if you can pay more than your minimum payment. That way you're paying more on your principal so that you avoid paying for interest on that amount in the future. And then you need to prioritize your needs versus your wants. Needs are groceries, your utilities. It could be your loan payments. Wants are eating out. Could be clothes. Could be concert tickets. So it's really important that you prioritize your needs above your wants.
So steps to create a personalized budget for you. So you're going to look at your income. Determine your income, review your pay stubs, identify what your take-home pay is. Don't count overtime or bonuses as these aren't considered your regular actual income. You're going to look at your expenses like Jessica talked about. Determine your expenses. Go over your fixed expenses versus your flexible expenses. So a fixed expense would be, house payment, car payment, something that is the same amount every month. Okay, so flexible would be your utility bills, maybe gas, how much you spend in gas per month in your car. Then you're going to create a spending plan. This plan should meet your needs first, and then your wants is things that you can afford. So a lot of times I'll tell people, maybe it's you plan and you create that plan for what your needs are. And then if it is something that you want, maybe you assess over a couple months period what you need to save up to get to that point to where you can afford that want instead of spending just one lump sum. Then you're going to review your plan regularly. So does it meet your needs? And does it help you achieve your goals? If not, you're going to need to make adjustments or create a new one that better fits your financial needs and goals. A big one is especially think about if you've got a job to where you get a raise on an annual basis. So that would be the event that you would need to review it every year and factor in what raise you get and then create a new budget going forward with those new projections.
Be accountable and responsible with your money. Pay your bills on time. Past due bills can damage your credit score. Do your research before making a big purchase. Ask for help and guidance, but do the work yourself. You will learn more by doing it on your own. And increase your income if you can. If not, decrease your spending.
So credit products, we've talked about, creating a budget, your checking account, all those other things. You also have to have credit. So a couple of the things that we offer at the bank that you are able to get credit. First one is credit cards. So we do offer credit cards for consumers to where, it is like a short-term loan. You're going to open up a trade line, and then you're going to pay it off in full every month. A line of credit, a lot of times these are for a business, or maybe they're tied in with your home loan to where you have we call it a HELOC, a home equity line of credit, to where you are able to use money that you have invested in your home. Installment loans, we do these a lot. Either we call them installment loans or consumer loans, to where you're going to take out a loan at the bank and then you're going to make installment payments, monthly payments. We're going to set you up on amortizations. And then mortgages. So it's time for you to look at purchasing your first home, or maybe you purchased a home but the rates have went down and you're wanting to refinance to get a better rate, a better term on your home. So those are all credit products, and a lot of times we see people that in their stages of life, they kind of mature to where they're at different stages and they apply and get the certain products that fit that stage that they're in.
Why do you need credit, and why is it important? Credit is part of your financial power. It helps you get the things you need, like a loan for a car or a credit card. Working to improve your credit helps ensure you will qualify for loans when you need them. Your credit history is important because lenders, insurers, employers, and others may use it to assess how you manage financial responsibilities. Your credit history determines the terms of credit granted, such as the interest rate you will pay. Reminder, your credit history doesn't have to be your credit future.
So what is a credit score? We talked about credit. Credit score is a 3-digit number that relates to how likely you are to repay back your debt. Banks and lenders use this score to decide whether or not they're going to approve for you a credit card or a loan. So most of you guys right now probably have a 0 credit score. I do stress that when you are a senior in high school, you need to start building credit. So and we'll talk a little bit about how, either it's a credit card or it's a savings account, do a loan. That way you are able to have credit before you actually need it. So lenders use credit scores to determine who qualifies for a loan. It also factors into what interest rate you're charged and your credit limits. The 3 main credit bureaus include Equifax, Experian, and TransUnion. They create your credit reports and can vary by a few points. So, you may pull one from Equifax and then you may pull one from TransUnion, and they may be quite a bit difference. But they all factor in together and create your score. So once you start building credit, you should review your credit report on an annual basis for errors. If you find something, make sure that you call and dispute it, because you don't want anything to hurt and penalize credit that you've worked so hard to build. So one of the most well-known types is FICO, the Fair Isaac Corporation. This is the credit score. Like a lot of people, if you have a credit card and they give you a free credit score with your monthly statement, it will be a FICO credit score is what they label it.
Understanding your credit. What are the factors that affect a credit score? Your credit score is made up of your payment history, credit or debit utilization, the amount owed versus available credit, length of credit history, new credit, and types of credit. Scores can range from 300 to 850. A good credit score is above 700, and most scores fall between 600 and 750.
So we talked about building your credit. So what's some things that could hurt your credit? So one big thing, and I see this a lot when we run credit reports, missing a card or a loan payment. If for some reason you can't make that payment, communicate with your banker. Communicate with whoever that payment is due to, because they're going to be more apt to allow some forgiveness and some leeway if you reach out and communicate with them. Bankruptcy or foreclosure. So bankruptcy, if it's a Chapter 7, which is fully liquidates all of your assets and you have no debt left at all, that can stay on your credit for up to 10 years. A Chapter 10 is just a partial, and so maybe you have some repayment capacity to where you've kept some of your bills, you've kind of maybe allocated them around to where you're in a better credit position. So those can stay on your credit for 7 years. A foreclosure can also be, it can be on there for 7 years, but the big thing with it is it can drop your credit score at least 100 points. Collections, charge-offs, that's something that can be hard on your credit, because you think about it, if you're applying for new credit and you've got collections or charge-offs that come up on your report, who's to say that you can guarantee that you're going to pay me this new line of credit that you're trying to get me to extend? So think about things like that. Being a cosigner on a defaulted loan. So, maybe you've got somebody that's in your family that they cannot get a loan on their own. You co-sign for them. If they default, then it comes back on you. Whoever is the co-signer, it's almost like it's a joint loan, joint ownership. So think about things really hard about, before you do those things. Here's a big one, canceling a credit card. A lot of people don't realize, okay, so I pay off my credit card, I'm going to call and I'm going to close it. Don't close that trade line, because that hurts your score. It can ding your credit I've seen up to 120 points. That's a huge thing. Wait until, just maybe put it away somewhere and don't use it. And then maybe that creditor will reach out to you and ask why you haven't used it. If they close it on their own for you, it does not hurt your score. Applying for too many credit lines in a certain time frame. So this is a big thing that will really hurt your credit score. A lot of times we see this with car dealerships. You go to a car dealership, they run your credit 5 or 6 different places to see what they can get you approved for. Make sure and don't do things like that, because that can really be detrimental to your score. And then, like I said earlier, errors on your credit report. Make sure that you get those fixed immediately, because those can really hurt.
So looking forward into the next steps, how will you pay for a higher education? There are scholarships available. You can apply for financial aid. There's student loans, and there's also a 529 college savings plan.
So scholarships, where to begin? First thing you need to do is get a list of all the available scholarships from your school guidance counselor. Go through these scholarship listings and make sure, look at the ones that you are eligible to apply for. Start thinking about scholarship essays and what you're going to write. And if you receive a scholarship, please send whoever you receive that scholarship from, send them a thank you card. A big thing with scholarships is a lot of times we hear kids, they don't want to, it's too much trouble, it's too much work. Think about if everybody thinks that and then nobody applies for these scholarships, and that's just money that goes unused. So make sure and apply. The thing is the essay, yes, it can be the hardest part, but it's the most important part. And a lot of times, if you take the time to write a good essay, you're going to be able to incorporate it, maybe revise it a little bit, and utilize it for other scholarship applications.
Applying for financial aid. FAFSA, which stands for Free Application for Federal Student Aid, can be found at fafsa.ed.gov. Each parent and student should have a separate ID. Everyone attending or going to college should complete the FAFSA regardless of income level. FAFSA is free, so the only real cost is the time it takes to complete. In fact, in families earning $100,000 or more per year, 78% qualified for some form of financial aid. Thank you for joining us today. If you would like more information on our Go Learn program, you can visit our website at legencebank.com.